Can you tell us whether or not China is an investable market, given all of this confusion?
I think in the short term, I think there's definitely a trade setting up for Chinese equities. And the reason for that is, multifaceted. First of all, the bond sell-off, global bond sell-off is likely coming to an end, which should lift tech stocks everywhere. China is very much a tech-heavy market. Second, while the unconfirmed rumors are most likely not true, there isn't like a reopening committee. We at Clock Tower, our sources in China have told us that there was a meeting and that it discussed putting together a reopening plan that may happen as quickly as March. And the third issue is that we do have a new government in China that will be in place in March. And so it does make sense for President Xi to want his new team, which, by the way, as we all know, we've all been hearing it for weeks now, is purely his team. I do think he will want that team to have tailwinds. So we've already seen some loosening up of real estate regulation. We've seen the all-important PBOC PSL facility be reactivated. And so it would also make sense that some COVID restrictions begin being loosened by March as an effort to give the new government a tailwind, and President Xi also some political tailwinds from economic recovery.
So these tech stocks over the course of the last several years have been hit pretty hard because of fears over the Xi administration and its crackdown on big tech. It's gotten too much influence. It's becoming too big a part of the economy. It has way too much sway over what happens with the people and the economy. If that is still the case, and President Xi has just been elected to an unprecedented third term, making him in some people's minds an emperor in China, then what does it mean for big tech? Why would you want to be there if this is the administration that's been against big tech for all these years?
I think the administration has been against big tech gaining political influence. But one of the things that they've realized is that there is a way to go too far, and they have gone too far. Like undergraduate students in China don't dream of working on an assembly line. They want to work in the TMT sector. They want to work in marketing and tech. And so China has a big problem with youth unemployment. Actually, it's the third highest in the world after Italy and India, of obviously the major economies. And so they need to loosen up some of these regulatory headwinds, which they have done. Like 2022, they didn't actually do anything in terms of tech regulatory crackdown. Most of that was concentrated in 2021. They're starting to loosen some of that, and I think you will see more of those. Now, look, I'm not saying this is a long-term investment. There's a lot of risk that comes with consolidation of power under one man, whether it's China or any other place in the world. But is there a trade? Is there an opening for being long tech stocks in China? I think there is, as there probably will be for tech stocks, broadly speaking, if the bond sell-off also globally ends.
Marco, before we let you go, just a few moments left here. What are your favorite spots in the market then?
I think for 2023, China is going to look fine. But also, I think there's macro trades that are going to work out once the Fed backs off that have very little to do with China. Things like commodities. Also, high beta plays to China should do well in 2023, whether it's the Nikkei, whether it's the European stock market as well. And that should also ease the bull market in the dollar if China puts a floor in the bottom and the Fed backs off. Those two will be the most important macro forces in 2023.